but thank you for coming in on time. Just two things I want to note. One is that this is obviously going to be here. Two other quick things. No, it's fine. We wish you could give your bank account number, Governor. But two other things. One, you've noticed us running around with regard to cameras and everything because we are going live with this on our YouTube channel. It should actually be live right now. Secondly, we will have this as a video file when this is finished. So in case you need a clean video, we'll actually have a clean video for you in very short order. So you don't need to worry if your pictures have issues or problems. Finally, we'll be conducting this in the usual way. The governor will be here. He'll make his statement. You're free to ask questions. We'll try and get some stuff off the internet as it comes along. And we're accompanied by quite a number of people sitting in this front two rows from the bank itself. So in case the governor feels it necessary to have them speak, they will come up here and we'll give you their names and the spellings of their names. Any issues? Facilities are just down this corridor in case you need to access them. Asante, Governor.
Thank you. Good morning, ladies and gentlemen. It's again our pleasure to welcome you into the Central Bank and for this press conference post the MPC meeting that was held yesterday, November 23rd. You've already seen the press release that was issued yesterday. And I wanted to cover a few points just to elaborate the background and also maybe emphasize some of the points as the MPC saw it. And at the end of the meeting, at the end of my presentation, there will be the usual Q&As as has been advised a moment ago. So without further ado, I'll just go into the specifics. And maybe it will take me a few minutes, but I think we know how we've been doing it in the past. So in the first instance, inflation, the inflation outlook is well anchored. And we already know that it has been falling towards the midpoint of the target range. And the target range, as you know, is 5% plus or minus 2.5%. And last month, it fell to 5.7%. That is the headline inflation in October. And this is following the declines in the prices of the key food items following the favorable weather that we received, or we've been receiving. Non-food, non-fuel inflation continues to decline. It is actually now, in October, it was at 3%. And it has been below 5% since December of 2016. So non-food, non-fuel, down 3%. And overall headline inflation number coming down towards the midpoint, and last month at 5.7. So all in all, inflation does not seem to be much of a concern going forward. What about growth? There has been a lot of discussion about growth by yourselves, by everybody in the country, really. And the economy, really looking back, has shown what I would call extraordinary resilience. and it has a very favorable outlook, or the outlook is quite favorable looking forward. I want to talk a bit about the resilience, which again was captured by the MPC members. In the first half of 2017, as you know, we already have, and you've seen them, you've seen the numbers for Q1 and Q2 of 2017. And the first half, Q1, Q2, the growth rate was 4.8%. And we've also looked at the leading indicators for Q3. It's true we are now in November, but we still have not received the final Q3 data from KNBS. They're still working on them. But looking at the leading indicators, we see that agriculture is showing a recovery or continues to recover. We know where it's coming from. It came from the drought, which had an impact on Q4 of 2016, Q1, and Q2 of 2017. So the numbers there, horticultures, for instance, tea production, etc., all those are showing recovery. Manufacturing sector, on the other hand, the available data for Q3 still show some subdued performance. So performance in manufacturing is subdued. I don't want to go through all the indicators, but I think there has been some that show this. And I think a lot of you have also talked a lot about some of the indicators that have been put out by some analysts, and in particular the PMI, Purchasing Manufacturing Index, I think that's what it's called. Purchasing Managers Index, which continues to show a decline in new orders, output, and so forth. But on the other hand, we have looked at this, and we can say that that's just one indicator. It may not be the best indicator, but it is an indicator. And we've looked at other wider indicators for this sector. That said, the question is, what are the sectors that are actually vibrant? And indeed, there are some sectors that are showing extreme vibrance or surprising vibrance. And these are the services sector. Services sector is doing particularly well. I would even say surprisingly well. For instance, wholesale and retail sector, transport and storage, and real estate sector. Those three sectors combined have combined to a total of 18% of GDP. And they are now, during the first half, and indeed during the Q3, the indicators on that show that they have been quite vibrant. So the question is clear then, what is going on? If manufacturing is down and these sectors are doing particularly well, how do you settle this? And the answer really, and we'll come back to that in a later point, is that these sectors actually have they are dominated by micro, small, and medium-sized enterprises. Micro, small, and medium-sized enterprises, that is the MSMEs. I think we are all familiar with SMEs, so just throw a micro before it. So those institutions. And these are the ones that really have been you may call it the backbone of the recovery, or the backbone of the resilience that we have seen so far in 2017. So therein lies the answer to your puzzle. How are we still growing at a relatively strong, respectable pace, even as we have certain headwinds coming our way? And the answer again is the MSMEs, which seem to be the ones that have been quite dynamic in those sectors. So for 2017, we expect that growth will be, we have recalibrated everything. Last time we talked, we told you about the numbers of Q1, Q2, and we did tell you that we hadn't revised our growth projections. But 2017, again, we are thinking we see something like 5.1, and this looks more like like a lower bound. I know last time we had said we will grow northwards of 5. So 5.1 is a number, a respectable number. And of course, in 2018, we expect that to be even more, the economy to be even more dynamic in 2018, but we haven't finalized the recalibration of the 2018 forecast. There are, of course, some upside risks to that, to this forecast, and also some downside risks, as we will discuss going forward. That's what I wanted to say in terms of headline numbers and in terms of the status of the economy. The external sector also, here, the outcome to September, the current account is estimated at 6.5% of GDP in 2017 for the 12 months to September. And this is higher than the number we quoted last time, and also higher than the target that we were thinking for 2017. And this is due to imports of food, you know, the drought-related imports that we were talking about, the maize and things, and also oil, petroleum products. The value on that has increased, mainly driven by the higher prices, international prices. For you to know, the price of oil has gone up. I think one of the indices that is there, the OPEC basket, is now in the $60 per barrel. And there are concerns about which way that will go. There was a conference in Abu Dhabi recently on this issue. I mean, this is actually the Davos of petroleum products, if you want to think of it that way. And the concern is, where will this go? Obviously, it has been driven higher by the problems that took place in the southern part of the United States, the hurricane, which obviously put out of commission certain refineries and things like that. But that is now coming back to normal. Obviously, there are other reasons for this. The concerns that of the political dynamics in Saudi Arabia and so forth. But those are all, that game is being played in the international markets, in the oil sector. The point, of course, is that there is from our perspective, we are price takers, and so our price, and indeed, therefore, our import value has increased because our volume doesn't change by much. Tea has been quite dynamic on the export side, tea, both in value and price. I mean, the volume, as it were. Volume, obviously, we expect that to continue because of the rains. And the rains have been quite favorable in the tea growing areas and so forth. And prices also have been quite strong. Horticulture also has shown significant resilience. And remittances continue to be at record levels. And for you to know, we always have an acceleration of remittances as we come to Christmas. I think we all know why. And that is something that we should continue to expect. Nevertheless, the current account for 2017 we are now estimating it at 6.2%, which is higher than the estimate that we had given you last time. And again, it's primarily driven by three elements. One, the higher prices, the higher import of food, some SGR imports, and then the higher oil prices. So all that lead to the increase that we have seen to 6.2%. Still, 6.2 is well within our, we are not concerned about the current account being large. And the reason for that is we know the financing of it in terms of FDI, in terms of portfolio inflows, and things like that. So that is quite well. In fact, last time, if you remember, I did make the point that our current account was falling rather quickly. And that is something that I said then. Okay. Let's move on to a couple of other items. I will say just one thing about the private sector credit. This has been the growth of that. This has been a concern. It has been falling, as we know, and had reached since August has stabilized and has begun to pick up or to inch up. And the last number that we have here is 2%. That was in October, 2%. And now, the interesting point, I do not want to go through the details of this because I think last time we did go through it. But it's probably better to just say that the sectors that had the largest credit growth are trade, manufacturing, real estate, and then you have others like mining and quarrying, building and construction, and so forth. So it's interesting that actually trade did receive a lot of lending to trade actually went up quite sharply. Manufacturing as well. If you think of the manufacturing, even though things were sort of flat in manufacturing, all other indicators, the point is that they'll be borrowing in order to begin their processes, meaning in terms of working capital and things like that. So there's some dynamism that is coming down, that will be coming later in the year, given the lending or the borrowing that they actually had. So I think all that is good news. I want to say a few things about the outlook. The outlook of the economy, I know I say that the outlook is quite favorable. But I think the question is, well, what were the sources of our resilience? What actually anchored the rather extraordinary resilience that I mentioned a moment ago? And there are a few points here. And the first, of course, is that our economy is very much private sector driven. So a huge segment or a huge proportion of our economy is actually being driven by the private sector. So private sector actors make decisions, and both in terms of their production, in terms of their lines of whatever products, and indeed in terms of their employment, all those decisions. That, I think, is an important point to make, meaning you don't have a very tight symbiosis with, say, the public sector. So I know there are some parts where you still have some of that, but I think on the whole, it's important to acknowledge our private sector-led economy. The other element is that we are highly diversified, very diversified in terms of industries, trading partners, etc. This is important, and we can compare ourselves with economies that are less so diversified. So, for instance, they are monoculture, that they are growing particular crop, or for that matter, oil. If you think of Nigeria, if you think of Angola and other, or they are concentrated in the primary metals or primary product space. So I think the point here is that we are very highly diversified, and that in itself provides a sort of an anchor to all the shocks that may be coming our way. There's another element which I think is not always appreciated as much, and this is that we have a high local content in our local financial markets. I want to repeat that again. High local content in our local financial markets. So if you think, for instance, about the stock exchange, I'm afraid I'll probably say things that contradict what you've been telling you. Some of you have been telling your writers, your readers. Actually, if you begin with the stock exchange is 25% foreign, 25% foreign content. 75% is local. Actually, if you think of that 25%, part of that are our neighbors. So you have institutions from Uganda, like you could think of the equivalent of the NSSF or other investors from Uganda or Tanzania and other people from or institutions from those jurisdictions. The point is, the idea of having, let's say, the entire financial sector is dependent on the flows of foreign investors is really something I would want to debunk. You know, you do have local investors. 75% of them of the investors in the stock exchange are local. And that actually has a stabilizing effect. If you think, for instance, also the government securities market, the government security market is 4%. 4% foreign, less than 4%. And the rest of us, meaning the 96%, that is all of us, meaning the foreign, the local content, all the ones that are investing in the government T-bills and government securities. These, I think, are astonishing numbers. So when we think about, and you write about foreigners coming in, it's true they are coming in, but I think it has to be seen in the context of a 96% weight of the domestic investors. I think we leave that for now, but I think it's important to see that that actually had a strong stabilizing effect in the economy. So it, again, acts like an anchor in some ways. A couple of things to mention here. What we have also seen is a very high level of optimism. Yes, very high level of optimism by actors in the economy. We did a survey, the so-called market perception survey that we do every 2 months. The last one was done in November. And in the package that you will receive, there is actually a slide there that shows something like 2/3 of respondents were optimistic about our economic outlook. 2/3 were either very optimistic or somewhat optimistic or optimistic. So 2/3, actually it varied. There are two sets there, and I'll let you look at it. But on the whole, it is 2/3 showed optimism in the economy. That is actually quite interesting, judging, or rather bearing in mind that that was in November when we did this survey, and that was sort of at the tail end of political uncertainties that we have experienced over the last few months. So all these collaborate to having a very positive or favorable outlook for the economy going forward. So I'll then go through a few points and then stop at that. The others will be quite bullet point, as it were, specific points as I go through. The first of this is the interest rate caps. I think last time I promised that we would be finishing on a paper and be putting it out for you to look at and things like that, and we did not do that. I think we all know that. So your question is, what happened, Governor? And I think the answer is, yes, we got caught up in other things, and that paper got, let's say, not finalized as we had expected. So we expect this to be finalized, and in the near term, in the near future, we'll be issuing it. So that's a commitment we want to stick with. And we do want your views and all that. In effect, we we will start that conversation at the right time. So let's wait. We have not started engines yet, but we will start our engines at the right time so as to have a sort of a mature conversation about this issue. So that's one. The other thing, I think some of you will probably want to ask me, so it's always good to give the answer before I'm asked. So what are we doing in the new currency, the new generation currency? And here I'll be brief. Yes, we are moving ahead with the production of and issuance of the new generation currency, as we call it. And this we are doing this consistent with the Constitution, the CBK Act, and other laws. And yeah, it's true you have heard that we have been sued and all that, but that is in the courts. We'll leave the matters in the courts. from our perspective, we are moving ahead, and our expectation is we expect, according to our current timeline, to issue the new generation currency sometime in the second quarter of 2018. So next year, 2018, second quarter, sometime around then. That is our expectation. On other questions, I think I'll just mention one other item and then leave it as that. You will probably ask for an update on Chase Bank and also on Imperial Bank. And you know, those banks are under receivership, and we are moving ahead in particular ways. And I think here we are moving ahead as we had explained. There is the expression of interest in the case of Imperial Bank, and we did tell you that there are some specific investors that have expressed interest, and we have chosen them. And they are now doing the work to come up with concrete proposals, as you can expect, along in accordance to the timeline that we had indicated to you. And we expect for them to come back to us. Well, actually, it's not like they are coming back to us. We are working with them, as you can imagine, you know, in some of these numbers. But the timeline for having concrete proposals is, as was indicated, sometime early next year. I think it is middle of January. It's in the press release, so that hasn't changed. There's nothing to report, basically. In the case of Chase, the point there is we explained to you that after the expression of interest and selection of specific investors, eventually we narrowed it down to SBM, the State Bank of Mauritius, which has been working with us, as we had explained to you. And the idea is they're supposed to come up with a sort of a binding offer. We had explained this to you some time ago. And like everything else, the calendar got pushed, or they got delayed because of the travel issues and coming in over the last month. I think we all know what that is all about. So anyway, they are on the job, but only a few weeks delayed, and we expect that to be brought to fruition as we had expected before, which is long before end December. So nothing, in a sense, has changed in that area, except for the delay in starting their work or finalizing their work because of the various constraints that all of us were under the last month or so. I want to finish. We've been in this journey, the deputy governor and myself, 2.5 years. We came in June of 2015. We have faced a lot of shocks. But we have faced each one of them, and in effect, pushed the economy into sort of a higher plateau. Now, looking ahead, we do have a few headwinds that are coming. I think that we have to face. I think we've talked about some of these things. The interest rate caps, how are we going to finance the rather dynamic micro and small and medium-sized enterprises? How are we going to continue revising the business models of the banking sector? Maybe these are not technically headwinds, but they are challenges that we have to deal with, and we are dealing with them. But putting it all together, the outlook of the economy is certainly bullish. Now, this is sort of on the basis of all the points that I mentioned before. So I think my point would be that this is the time to really, as I have told investors, this is the time to invest long-term in the Kenyan economy. This is the time to take a long-term bet in the Kenyan economy. There are all these factors that are there, and at the end of the day, we cannot be sure if there won't be other shocks that will come our way. Of course there will be. But I think that same approach that has brought us here and has allowed us to overcome the challenges that have come over the last 2.5 years will continue to lead us going forward. So thank you very much, and now I can take your questions.
All right, thank you, Governor. I won't step into this too much. What I want to ask you to do is to please introduce yourselves and your institutional media house, and then ask your question. Preferably, if you can just do one, and then if there's any follow-ups, we can always follow those up. We'll take maybe 3 or 4 at a go. Governor can take those, and then we go back and forth. So if you do that, just put your hand up. There's a microphone there and a microphone here. So the guys on this side, Peter will sort you out, and the guys on that side will be sorted as well. Duncan.
Thank you, Alice, and congrats on your new gig. Governor, just a quick, two quick questions. You said the current account deficit is likely to widen. Please remind me what your initial forecast was. And secondly, in regard to the Chase, the good bank, bad bank plan, I'm hearing certain shareholders, there's a bit of disquiet among some shareholders who feel the Mauritians are coming in to pick the best bits and leave the bad bits behind for them. Any comment around there? Thanks.
Thank you, Governor. Felix from Bloomberg News. Could you perhaps just give us the growth forecast for... Please stand up. Could you perhaps just give us the growth forecast for 2018? And what are the reasons behind the tick up in the credit growth, and where do you see the figures most probably in the first quarter of 2018? Thank you.
Okay, fine.
Thank you. Sophie Kinoti from Radio Citizen. Now, Governor, kindly explain how will CBK
I'm sorry, I can't see you. Oh, there you are. Okay, I see you now. Yeah.
Sophie Kinoti, Radio Citizen. I'm asking, how will CBK face out the current currency in circulation?
Fine. Can I handle all those? Because I didn't note them down. I have to work from memory. I was checking some things. Okay, fine. First, in terms of the, Duncan, I didn't say that the current account deficit will widen. No, I say that our focus for 2017 is 6.2%. If you want to compare it to what it was in other, say the previous forecast, I think the forecast I had before was something like 5.5. I think that's a number that we talked about some time ago. So I don't see it as a widening. So let's have the correct language.
It's wider than what you expected. 5.5 versus 6.2.
The forecast last time was 5.5. Please use that. The last forecast was 5.5. The current forecast is 6.2. Okay? If you want to see the direction it's been coming all the way from 9.8 3 years ago. So, and the rest is clear. So please, let's use the correct words. That was your first question. The second question, again, I wrote them down, but not, you said something about Chase shareholders and things like that. I cannot comment on those things. Those are things that we cannot comment on. As you can imagine, we are the central bank. We don't comment on rumors, gossip, and fake news. So those remain elsewhere. Felix had a question about the growth of private sector credit growth. Your question was about the 2%, where it's coming from, right?
Yeah, where it's coming from, and what's the direction going forward? Is it sustainable? And the growth forecast for 2018 as well?
Yeah, so the 2% is still lethargic. I mean, this is, let's be clear, 2%, all we are saying is we've reached rock bottom. I mean, we are not quite excited about 2%, right? We need to go back. I mean, the economy is growing, let's be clear. The economy is growing at 5%, right? In terms of nominal growth, it's probably growing at 10, 12%, thereabout, right? That's nominal growth. So you can see credit to GDP is falling. It's actually fallen to levels that we had maybe 10 years ago. So it's somewhere in the order of 20, I think 23, 25% relative to GDP. So we are still way below where we want to be. So I don't think I'll get very excited about the growth of 2%. But I already told you the direction, meaning where is it that, where is the growth taking place? I mentioned the sectors. And from our perspective, there's a lot more we need to do to say that we have gotten this problem behind us. That said, there are 2 points I would want to make on this. The first is that this is not a problem just specific to ourselves in Kenya. There has been some change in the way, let's say, businesses are using credit or their demand for credit. You can look across the region, Tanzania, Uganda, they all have the same trends, meaning private sector credit growth has fallen dramatically, like ourselves. We've actually seen the same in advanced economies, the US, the UK, similar trends for different reasons. But I just want to make the point that there's a lot more going on. And at this point, we cannot tell you that we've incorporated everything. And it's true, we wanted to be at the minimum, we need to be growing in line with nominal GDP at a minimum. But I think what we need to be sure is that this is being used correctly and therefore is not leading to, say, concerns on prospects for, let's say, inflation expectation getting unhinged. So we need to be a bit careful there. So that covers both questions, I think, right? I don't have a forecast at this moment for 2017. Although the GDP forecast, we will recalibrate it again. I mean, we did a rough estimate, and this is what I said will be northwards of 6. But I think we need to do a better, how do I put this? We need to anchor our GDP projections for 2018 on what we have discovered is going on in the economy at this moment. And we haven't done that. We haven't, in a sense, appreciated the sources of our dynamism. So, for instance, if I told you it is X%, you'd ask me, okay, what about specific sectors? What are you saying about MSCs and things like that, which were the points I mentioned before. So we are not there yet. We ask for some patience. We need some time. We'll get to you. There was a question about the currency, what we are going to do with currency. And I think this, I would rather not talk too much about it because that is something that we will deal with when that moment comes. So just be a bit patient. When that moment comes, we will let everybody know what we are doing. So those are the questions. Yes, please.
Yeah, my name is Patrick from Citizen. And my question is around the currency once again. Following the court decision on Tuesday, I wonder what steps you've been able to take or what moves have you been able to make in regards to the process of actually designing and issuing this particular new generation currencies. And then do we have any details that you may share with us as far as the design and features go? And the third one will be around capping. Now that you've indicated we have some sectors that have realized somewhat some growth in terms of credit towards them, is the repealing of the capping law still on your menu? And finally, will it cost you anything to phase out those old currencies even as we wait for the new ones?
My name is Ken Masharia from Capital FM. I want a comment about the approach and regulation about cryptocurrencies. I hear there are rumors or fake news that you that the banking fraud is harassing some traders, and there's actually a court case in regards to this. So what is the approach of central bank, and what kind of regulations will you be putting in place?
One more?
On the matter of the, Alex Mwangi from NTV. On the matter of the interest rate caps, when you joined the central bank and the reforms that you have been undertaking, you call them a new normal for the way banks operate. Should we then say that now going forward for the banks, they should accept it as a new normal that the interest rate caps might be just there for the long term? Because so far the efforts to reverse it seem to have hit a rock. And maybe now that the election is over, the election season is over, what are the plans of either engaging the bank or the executive on a review of the interest rate caps?
May I take those? Thank you. Patrick, I'll be very brief. But you have an excellent name, right? Okay, so on the matters that are before the courts, I really cannot comment on that. And also in terms of details and things like that, we cannot comment on any of that. So matters, as you can imagine, that are highly sensitive. Is it possible for you to give me your password?
I can.
Yeah, but it's of no use, right? You know the rules about passwords. Never give it to anybody, right? This is more than just password to your email. So I'm just making the point that it is highly sensitive. So at the right time, you'll see the things. In terms of your question, and I'll take this also with Alex's question on the capping of interest rates. I think our views about the interest rates remain the same, capping of interest rates. But I think the point, as we said before, is we want to bring actual data to the table so that everybody can see the impact on that. The fact that you have some credit going to some specific sectors, as I mentioned, that isn't what drives it. Okay, this is sure we expect credit to go into those sectors, but the question is what would have happened? You know, what is your counterfactual, as it were, and where are the problems? Where are the problems being observed? Is it in particular sectors? Is it in particular entities and things like that? So we need to deal with that conclusively. I'm just saying that it's not a tall order, but it is something that needs to be dealt with, and that's what we intend to do. So again, it is data-driven with specific experiences and things like that. So we'll deal with it at the right time. The only point is that we need to bid our time until we have the data and we have. So Alex, I think your assessment is not quite accurate. We will get there. We will get there. I think the point about the new normal is appropriate, meaning there are certain things we need to do. There are certain things that the banks need to do, and I think I've explained this in the past, that the worst thing that can happen is a sense that when, it's not so much if, it is more when. When the interest rate caps are removed, banks continue to behave the same way they used to behave in the past. So we go back to where we were before. That would be traumatic. And therefore, we are pushing them to change the way they behave. For instance, one of the things we're doing is asking them to be better, to actually be better in pricing risk. So in the past, this wasn't something that was that important. I think I've given you the example of my chicken farming, right? I'm not going to give you that now, but I think eventually I'll give you that example offline, as it were. But anyway, so the point here is that it is important for banks to be much more, to price risk correctly. And it is the individual risk of that particular investor, not the risk of the industry. I may be a chicken farmer, and I don't know a thing about chicken farming. You may be a chicken farmer that knows a lot about chicken farming. Your interest, the price they give you should be a lot better than mine. So things like that, even though we're in the same industry. So that's one thing. The other thing, of course, is things relating to the providing customer with information. So being transparent on all that, but also customers being fully armed before they go to the to meet their relationship manager in the banks and places. So, for instance, we have the cost of credit website that gives you early information about the pricing of loans, not only in that company, in that bank, but in others. So you can do window shopping. You can do a lot of window shopping on your phone and on your computer, you know, before you go to meet the bank manager and things like that. That is all the information. The use of the credit reference bureaus and indeed credit scores. At this point, as we have said before, it has really been punitive. So it's a blacklisting sort of operation. It should be the other way around as well. That I get benefit, I get a better credit score for being a good borrower. So when I borrow and pay and repay, my credit score should improve. At this point, it looks like, and this is the sense we get, customers get blacklisted because you failed to pay for 1 week. And when you pay, the credit score, the blacklisting remains. So there's a bit of mess, as it were. So these are all things that will change the others as well. But the point is that actors, meaning banks, will need to change their behavior to be better performance. Of course, there are other issues in terms of shareholders also have to be, they have to accept and be more comfortable with lower earnings. As we had mentioned before, I think it was in 2012, the return on equity was 30%. Return on equity for shareholders, 30%. Average, that is, in Kenya. So that is something that is clearly not sustainable. So our view is once we make those changes, Alex, once we make those changes, we will be in a better position in terms of moving forward. Of course, there are also other things we need to know in terms of how to finance specific things, the MSCs and things like that, MSCs and so forth, but those are all things that we'll do as we move forward. Ken's question about cryptocurrency. I want to answer it a little differently, Ken. We have, back in I guess it's a year and a half ago, we issued a press release on cryptocurrency. That press release still remains. Meaning our views as expressed there still remain to this day. We warned everybody, yourselves, the customers, the consumers, everybody, that this was a risky venture. And it's fine for maybe people in other worlds or other places to get into this operation of cryptocurrencies. But we warned that it could be quite risky and the consumer is not protected. And we wanted to be very clear about that. Now, it could very well be a Ponzi game of a kind. And I think you've seen how the prices have gone up and down in various places. You know, we've seen this game before. We've seen it in the context of the global financial crisis, the lead up to that. You've seen it in the context, years ago, there are stories about the speculation that took place in the tulip mania in, I don't know, 400 years ago, 600 years ago, and things like that. These are all things that, risks that are out there. Our point has always been the same. There are risks, and we want to be sure that everybody knows that those risks can come back to haunt us and do have and could have financial stability concerns. That's why we were so clear about it. Of course, there are other considerations in terms of the, for instance, use of financing, or should we say allowing illicit transactions and things like that. All those are there. But I want to be clear that these cryptocurrencies, they are using a technology which, as you know, is known as blockchain. There may be a future for blockchain, and we think we are working with our peers around the world on things that could lead to, using these technologies in particular ways. So I think we need to distinguish the risks, the product, with the technology, which may very well be a good technology. I think all of us know that even not every new technology is used wisely, right? You can use any technology poorly and to the detriment of society and other things. So those are issues that I think we warned society of, our people here in Kenya, and we continue to warn them against it. Other questions, please?
Maybe one more round.
My name is Otiato from the Standard. I just wanted to know, did the court grant CBK extension of the Chase Bank receivership after the case was heard just recently? And due to the delays by SBM, do you still expect them to buy the bank by December? And then I wanted to know about the NPLs. What do you think might have caused the reduction in NPLs? Is it, because you mentioned in an earlier setting that the government had delayed paying suppliers. Is that part of the reasons why NPLs have gone down? Thank you.
Any other question?
David Njoroge from Soko Directory. My question concerns the MSME. Which cluster do they fall in? The one that is dynamic into your perception? Because this is the same cluster that is really starved of the credit from the financial banks.
Okay. Any last one?
Governor, could you give us an idea on when the bank is going to release guidance on IFRS 9 to the banks? Thank you.
Okay, thank you. Thank you very much. So your question about Chase and SBM, the point there is, as I said, we are still on track for completion before end December. It's true we had wanted to complete long before, like everything else, right? We all want to do it like yesterday. But the reality of the delays that I mentioned to, I alluded to a moment ago, have led to that. So we are still comfortable that this will happen. So let's see how that goes forward. Now, in terms of NPLs, that's your second question. The change wasn't dramatic. I think we need to be a bit more relaxed about these things. I mean, it's true it is in the right direction, but I mean, it's not that significant. And I think I say this also knowing that when it goes the other way, at times we get rather excited that it's worsening, it's only worsened by 0.5 percentage point or something, you know. No, I think we have to understand this. The point still, and your point is valid, what is going on in the NPLs. If you look at it mechanically, actually what has happened is that ratio is a bit deceiving. One needs to look at it a little more carefully, because on the numerator you have the non-performing loans, right, in Kenya shillings. And below it, you have the gross loans, right, outstanding in Kenya shillings. So quite often when the denominator rises faster than NPLs, the ratio falls. You understand what I'm getting at? So there is that sort of dynamics. Does that mean that everything is rosy and not of concern? Probably not. I mean, if you are concerned about it before, you'd still need to continue to be concerned. So I just want to, not to dissuade you from your appreciating that the number is improving, but rather to tell you that there may be things happening in the margins. Still, the question is, what is happening with NPLs? And I think here the strategy has not changed. Banks are aggressively looking at recovery of their NPLs, right? Making them more performing. So dealing with customers. And I think there are specific instances that we mentioned last time. I mentioned specific loans. I did go sector by sector. And I think the only sector I didn't mention specifically was the trade sector. Actually, I did mention the trade sector. But you also know that there's been improvement in terms of discussions between, let's say, the retailers, the large chains of retailers that have had some loans that were not performing, and the banks are working with them and other creditors and so forth. So the banks are on top of that. The other thing, of course, is making sure that the banks actually, let's say, correctly classify loans. That is something that we are very particular about. So if a loan is non-performing, yes, they need to classify it. None of this business of waiting, let's say, trying to, which is inconsistent or is wrong, is inconsistent with our guidelines. So I think it is important to be clear that there's no trying to hide the NPLs, if you understand what I mean. Let things be seen transparently. That is one of the pillars of our new normal, in terms of correctly having good data in that sense. So I think that is what I would say about the NPLs on that. There are two other questions. One is on IFRS 9. I think the point I would make is the modalities and implementation of IFRS 9 in the banking sector are still unclear in many jurisdictions. So let's begin there. I'm not going to go into a history of it. And here, obviously, I speak under the control of our Deputy Governor. She's the expert in this area. Actually, I would actually say that not just in Kenya, but we are talking in Africa. She's one of the ones that are working with other jurisdictions in Africa and indeed in the world in this area. So I speak completely under her control. But that said, the modalities of implementing it in the banking sector are still not clear in the various jurisdictions, because there are certain points that need to be dealt with. Of course, we understand the reason for the IFRS 9 sort of rubric were it is intended to strengthen the financial system, or indeed to strengthen the institutions that are reporting under this. But I think the point here is that, yes, there are other considerations, meaning a too aggressive move in this area may itself be destabilizing. And this is what is being recognized more and more in various jurisdictions. And in our case, of course, we have to also appreciate, and going to your question, that our institutions have some capital buffers already. Remember, we increased we called it the conservation capital, right? So, which allows them to have some elbow room in this area. And of course, the other things to mitigate against, or the other measures that can mitigate against if you think of, if indeed the IFRS 9 requirements leads to an increase in provisions, there are other ways of working with that. But at this point, I don't want to say any more than that, because, as I say, the details of this are still being discussed in the appropriate fora. So let's wait for that. Let's be patient. I know December is just around the corner and January 1 is just around the corner. But I think bankers and regulators generally have a way of coming to a good solution and beating the clock. So don't worry about that. Then the last point is David's rather perceptive comment. So your question is, the sectors are dynamic, and I'm pointing to the SMEs as the backbone of that dynamism. So they are that's where it's coming from. But as you say, they get very little capital based on everything else. That's exactly the point. This is I want to call it a puzzle. But it's not a puzzle as such. The point is that we are trying to understand better with you as well. All of us are trying to understand better what actually are the constraints on the SMEs. It's true there was a rather huge document that the National Bureau of Statistics put out on SMEs. And in there it showed that the SMEs don't get much capital from commercial banks. They don't. Actually, they get capital from their own family. So from themselves or the family, sort of extended network. That's where they get their working capital and things like that, or startup capital. The point is, going forward, we need to understand better how to support them. They are unique in many ways. We know they are very dynamic, not only in terms of GDP, but also in terms of employment. They employ, I seem to recall, a number like 6.4 million people are employed in this sector. We can confirm that number later. The point for us is that there's that puzzle, and the question is, how do we need to learn? How are we going to learn from others around the world who have been very successful in pushing the dynamism of SMEs? By the way, if you look at even advanced economies, SMEs actually play a large role in Germany, for instance. I think the number there is 98% of the farms actually are SMEs. Now, I know when we think Germany, we think BMW, we think, those sort of large corporates. But actually, a lot of the inputs to those companies is coming from small and medium-sized enterprises. So it's not just an issue of finance. There's a lot more going on, and I think that ecosystem is really what we need to work on carefully and figure out how to strengthen, because if we could actually fix it, I think the dynamism that we are talking about a moment ago, Felix will be very excited if the number is 6.5% or 7%. Maybe it will be way above that once we get it right. So I think we share your concerns, and more than share your concerns, we see a certain responsibility to help shepherd this for the benefit of the country, for the benefit of our people. So thank you very much, and it's nice having this meeting with you. I want to end with only one thing, which is to formally introduce you to Mr. Wallace Kantai, who is now, as you all know, the head of our communication, head of communication. I have learned in the last few weeks, he's been here, that I have a long way to go. So I have to improve in many ways in terms of the way I deliver things, in the way in the way we present things and so forth. I am on a learning curve, and so from that perspective, I think I'm happy to be in his hands, so I'll be his student. And I think it will be a good arrangement for all of us, because some of you have actually been asking us to do better. So I think, Wallace, we are very glad to have you here. I think for us, as I mentioned to you and others, communication by central banks is very important. And it is important for several reasons, but the first one, the one I'll only mention, is for the effectiveness of monetary policy. If we are communicating well, then it will be, the effectiveness of monetary policy will be enhanced. So in a sense, we are including you as one of the, let's say, people that will also enhance monetary policy. So he's your contact in many ways, and I would also ask you to give him some space, because he knows a lot about what you do. He's your friend, he's everything. But he still has a long way to go to understand how the central bank works, So I will teach him that, So we will have a regular thing. So thank you very much, and look forward to seeing you next time.
Ladies and gentlemen, I'll ask you to allow the governor and the central bank team to leave first. Just to clarify, there will be no side interviews. I think we've covered what we needed to cover here. In case, sorry, Governor, you're free to, yes, and our team, except for my comms guys. So again, just to clarify, no side interviews, please. Anyway, we'll sort that out. So the video will be available. It's available right now on YouTube as a file, but also the file itself will be available for you in the next couple of hours or so. There's also refreshments just down the corridor in case you want them. Asanteni sana.